Today is Monday, July the 13th, and the market looked like it was off for a joyride and then plunged. So what happened today? Well, if we go to CNBC, a couple of things. California reclosing indoor restaurants, movie theaters, and bars. Surge in coronavirus cases, but testing delays across the nation are a big problem. You can wait 72 hours to 5 days for results. And the news that drug makers will start vaccine production by the end of summer did no good to spark the market. Why? Because they're not really. All they're doing right now is they're buying equipment. They're buying raw materials. They don't know which vaccine is even going to go into production, much less is it going to be FDA approved. So this comes from the White House. So take this with a grain of salt. Let's look now at our key charts. And this is the Mcclellan Oscillator, which took a bit of a dip down. Let's look at the Mcclellan Oscillator now in picture format with some lines drawn. And you can see that the bulls are in charge above this line, but the bears are in charge below this line. So something's going to break pretty soon. So let's keep an eye on that little wedge. And if we sink lower tomorrow, then that's a bearish sign. If we go higher, that's a mildly bullish sign. And right now, the futures are actually up a little bit. So if we go back to the markets, the pre-markets, we can see that the markets are actually up. That's not the one I wanted. And that's not the one I wanted. There we go. The markets are up 0.3% right now after hours. Let's look at the charts because there is some interesting stuff to see in the charts, as there always is. The Dow Jones continues to be in this channel between the two gaps, broke into the gap and dropped down. We had such a massive decline as we saw in the FinViz chart earlier. The S&P, similar to that. Now that trend line proved to be resistance again. We opened above the trend line, moved up to 32.34, but came down and finished much lower than yesterday and well below the trend line. The volatility index, meanwhile, spiked up. I'm sure that's in the latter part of the day. Apple was looking like it was up $15 at one point, and it hit the magic $399, 600. So you know that there were people that had sell orders in at $399.50, $399.60, $70, $80. Anything to front run the people who put in their stops at 400. Come down and caught support on the 150% exactly, and then bounced up towards the end of the day. Caterpillar nonetheless had a pretty good day, and arguably is still making that run for this 78.6 of this downward move here, which would confirm a Gartley pattern. Gartley, let me remind you, is the AB is 61.8% of the XA. The C comes down into this range and with a low of 88.6% retrace, and then it can come up to 78.6, and it's on its way there. So Caterpillar had a remarkably good day today and stayed above 78.6%. So don't know why, but that's good. Now FCX had a really good day and equaled its previous high. But I didn't want to buy it. I mean, the alerts went off, but I didn't want to buy it because I said I wanted to wait until it had come down and did some retesting of the $13. And that's exactly what it did when it closed. It came down and it closed at $12.92. I actually put in orders to get my stock at $13.01, and I sold after hours. So I'm willing to get back in, take the little profit that I made. I think I made about 40 cents per share, 50 cents maybe on 300 shares. But I'd rather make a little bit of profit and see what happens, because I wanted to look for this 13 retest, and we got it. Let's see if it'll bounce off it tomorrow. Home Depot, meanwhile, came out of this wedge, but then fell back in again. So we're still in this wedge, which is getting tighter and tighter. Facebook, there's your Facebook, still stuck at 127.2%. NVDA came down, has been playing between the 178.6 and the 161.9 1.8%. The Fibonacci's are really important. JP Morgan, which has earnings this week, maybe even tomorrow, that's what its chart looks like. Let's see how all the banks did, because they're a good gauge of the financial health of the economy. And while they are up, the financial health of the economy is still questionable in my mind. I'm still glad that I'm holding on to some short, some SPY puts, and I'm still glad that all the stock that I have is covered with short calls. I rolled my 245 and my 250 short calls that were going to expire this week when Home Depot started to run away. I rolled them into the following week, and the pullback was substantial enough that that roll actually made quite a bit of money for me, like about $1,500 or $1,600 on 7 short calls. But I'm still holding on to them because I still suspect more consolidation in this wedge. I'd like to get beyond earnings at least another 2.5 weeks before anyone can convince me that this market is healthy.